we all know that I didn't even know that my mic was not on. We all know that there are three types of market structure: an uptrend, a downtrend, and a ranging market. So I don't need to start going about market structure. If you don't know about market structure, go and read about it. So for now, let's talk about an uptrend, making use of the Fibonacci retracement with an uptrend market. So first of all, you observe the market and you are certain that this market is an uptrend. And being an uptrend market, you'll be looking for buy positions. You'll be looking for buy entries, good positions where you can enter for a buy entry. So for example, let's say this is an uptrend market and this will be your swing low. This will be your higher high and higher low. This will be your higher high and this will be your higher low. Also called swing high. And here will be your swing low. Swing low. So when trading with Fibonacci retracement, first of all, Fibonacci retracement has a lot of numbers on it, on the tool. Fibonacci retracement tool has a lot of number. We have the 0, 1, 0.5, 0.618, 0.78, and so on. But I make use of these numbers 0, 1, 0.5, 0.618, 0.78. That's the number I make use of, and I delete other numbers. This is the main thing you need. You don't need other numbers, you don't need other tools and other settings. Just these settings, you are good to go. So when you place your Fibonacci retracement, when you're looking for a buy position, when you're looking for buy entries, and you put your Fibonacci retracement from this swing low, this swing low, you drag it all the way to this swing high, your highest high. You understand? Now when you drag it to this highest high, you observe that your Fibonacci retracement has the 1, the 0.78, the 0.618, the 0.5, which is the 50%, and then the 0.0. Let's just call it 0. You understand? This is what you need when you're trading with Fibonacci retracement. Now, what do you need? What will you observe? You first of all observe the market structure being an uptrend. Now, you observe, secondly, break of structure. There must be a break of structure, a BOS, before you can start thinking of looking for buy entries. Because once a break of structure is formed in the market, there will be a new high. There will be a new high. That's your swing high. And when you observe your swing high, from your swing low, you drag the Fibonacci all the way to your swing high. Then these numbers will appear. Now all you need to do is wait patiently for the market to retrace back to the 0.61 area. Once the market retraces to the 0.61 area, that's when you should be thinking of buying positions. That's when you should start thinking of buying. So when it hits your 0.61 position, that's where you enter for a buy. And you put your stop loss below your 0.78. Your stop loss should be below your 0.78. That's where your stop loss needs to be. Normally, some traders enter for a buy position at the 0.5. This 0.5 is the 50% retracement. 0.5 is the 50% retracement. But I normally enter with the 0.618 because I like to buy in a lower discount. I like to risk low. You understand? I don't like to risk too much. I just once the market retraces to the 0.618, that's when I enter for my buy position for an uptrend. So once the market hits here, you should start thinking of buy position, and once you enter for a buy, the market should start going up immediately, as it should be. That's how to make use of the Fibonacci retracement with an uptrend. So now if you observe, you observe that once this market once this market got here and went up, it created another swing low here. Another swing low was created here. That's another lower high, and another higher high, another higher high was created here, which another swing high was created here. Now, if you want to enter the market again and you're looking for more buying opportunity, all you need to do is, here now is now your current swing low. Here is your current swing low, and here is your current swing high. All you need to do is place your Fibonacci retracement here again, no longer here, because you have made use of here to get an entry here, to take your profit here, or to take your profit here. And also, when you enter for a buy position here, you should be looking for 1:2 risk to reward, or 1:3, and that should be the previous higher high. The current higher high should be your TP. You should be thinking of taking your TP at the previous higher high. Once the market gets to the previous higher high, you take your profit. So now, entering for another buy position, all you need to do is wait for the market again, put your Fibonacci retracement from this current swing low all the way to this current swing high, and you should have your Fibonacci giving you here to be 1, giving you here to be 0.7, giving you here to be 0.618, and maybe giving you here to be 0.5, and then here your 0. You understand? Now all you need to do again is to wait for the market to retrace. This is where psychology comes in place. You understand? This is where psychology comes in. Some people, when the market is retracing and it's almost here, they start entering, and the market pulls back a little bit again before touching here. By then they are stopped out. You understand? So the best thing is to wait for your setup, wait for your plan, for the market to get to this area. You understand? For the market to get to this area. When the market gets to this area, so all you need to do, some people, they allow their emotion to get the best of them. That's where psychology comes in place. You need to allow your plans, you need to trade your plan. Some people, when the market is retracing and it's not yet to this 0.618, they enter for a buy. I put their stop loss here. You understand? And sometimes they don't even put stop loss, and they will be stopped out very fast. So the best thing when trading with the Fibonacci retracement is to trade according to your plan, according to your own setup. So all you need to do again is to wait for the market to retrace all the way down to the 0.618 area. I call this area the golden area. I call it the golden line. Some people call it the golden area. I call it the golden line. So once market touches down to this 0.618, you should see the market going up again, breaking the previous high and forming a new high. So that's how you keep trading the market, entering for buy positions for an uptrend market. Then for Now for a downtrend, you need to observe first a break of structure. First of all, you have observed the market structure is a downtrend. All you need to do is look for your lower lows and your lower highs. And here is your lower highs, and here is your lower low. So now that your low, you have found your lower low, all you need to do is take your Fibonacci, place your Fibonacci here, drag it all the way down to your lower low, and you should see your Fibonacci having the 1, 0.78, 0.618, 0.5, and then the 0. Now all you need to do is the same thing, wait patiently for the market to retrace all the way from the lower low to the 0.618 area. That's when you should be looking for a sell position. That's when you should be looking for entering for a sell. You understand? So once the market hits your 0.618 area, you put your stop loss above the 0.78. Remember, your stop loss will be above the 0.78. That should be your stop loss. You understand? Then your entry will be your 0.618. So you should see the market falling back down again. And once this market has fallen back down, you observe again that another break of structure, because this lower low has been violated. Now that this lower low has been violated, it created a what? BOS, the break of structure. Now, you will now place your Fibonacci to the current lower high, which is this. It's not your current lower high is no longer this one, but this one. Now your current lower high, which is this, you place your Fibonacci all the way down to the new lower low. And placing it to the new lower low, you observe that your Fibonacci will be giving you 1 here, 0.78 here, 0.618 here, 0.5, and then here 0. Now all you need to do is wait for the market to retrace all the way down, all the way up to the 0.618 area. So once the market gets to the 0.618 area, you should be entering for a sell. And when you enter for a sell, you put your stop loss above the 0.78 area, and you should see the market coming down. So all these things, this is the right way to trade. But most traders know about this strategy, but every time they come out from the market using their account. Why? It's all about psychology, it's all about your emotion, all about your mindset. So I'm going to quickly show you how to make use of the Fibonacci retracement tool. I forgot to tell you guys earlier that whenever you are using the Fibonacci retracement tool, you need to start with a higher time frame, at least from 4-hour time frame, 1-hour time frame, to analyze the market. As you can see with this market, we are using gold USD. As you can see in this market is an uptrend market. This market is bullish. So we're going to use our Fibonacci retracement tool to look for buying opportunities. This is where you can find your Fibonacci retracement. This is where you can find your Fibonacci retracement tool. You can find it here. This is your Fibonacci retracement. You click on it. Just like I told you guys earlier that the Fibonacci retracement tool has a lot of numbers on it. But the number you need, I have a lot of numbers on it. But the number you need here to make this more simple for you, and so that it won't be more confusing, all you need to go do is go to the setting, untick this, leave zero. All you need is this 0, 0.5, 0.78, and 0.618, and 1. Untick this, and then go down. If you observe here, you observe that the Fibonacci numbers are at the left side of the screen. I like my own to be at the right side, so I can better understand when the market is retracing back. I can understand it better. So all you need to do is still go to the settings, scroll down, you see level, you move it to the right. As you can see, it's now at the right. Now, if you observe again, you find out that the Fibonacci has these colors all over it, but I don't like the colors. Also, I don't like the colors. All I just need is the line and the numbers. So all I need to do is go. Don't forget to untick all these unnecessary numbers and only leave 0, 1, 0.6, and also this 0.7. So I don't like the color. Some people do, some people don't. Me, I don't like it. So all you need to do, if you don't like the color, all you need to do is drag this background all the way down. But if you like it, you can let it be like this. But I don't like it. So I used to drag my own all the way down. And you should have your Fibonacci retracement looking like this. So if you want your own setting to be like my own setting, you take a screenshot of this, or you take a picture of this and set your own exactly like mine. So now make use of the Fibonacci with this. Now if you observe here, you will observe that this is an uptrend market. This is an uptrend market. So let's start from this. My trading view, it doesn't have a replay. It doesn't have a replay. The subscription doesn't have a replay for now. So you bear with me. Let's make use of the candles that have already played out. So if you observe here, you see that there was a break of structure here. There was a break of structure here. If you observe here, there was a break of structure here. Just like I told you earlier, that when you're trading with the Fibonacci, there are things to put in consideration. First of all, the market structure. Secondly, there must be a break of structure, a higher low and a higher high, if you are looking for buying opportunities for an uptrend with a Fibonacci retracement. Now that you have observed the break of structure, that should give you here to be your low. Here should be your low, and here should be your higher high. You get? If this market have not played out, this is your current higher high. Now this being your current higher high, and this being your swing low, your HL, all you need to do is take your Fibonacci, place it at the low, at the current low, all the way to the current high, all the way to the current high, all the way to the current high. If you are seeing this, you observe that market retraced all the way to the you observe that this market retraced all the way from the higher high down to the 618 area before going back up again. If you observe, you will see that the market retraced down to the 618 area after you must have dragged your Fibonacci from the swing low to the swing high, you will see your golden line at this area. Now all you need to do is wait for the market to play out as it should be, which it did, which it did. Now the market played out, you enter for a buy here. Now entry for a buy here. Here should be your entry for a buy. And remember, I told you that your stop loss should be below your 0.78 area. Your 0.78 area, that should be your stop loss. And you should target either the current high or above the current high or above the current high. But I normally target the current high. And the current high normally gives you a risk to reward of 1:2, 1:3. You get? So this is the Fibonacci retracement working marvelously with this uptrend market with gold. Now, if you observe, you will observe that the market, if you observe, you observe that the market have created another high. Another high have been created here. Another high have been created here. After the market broke this high and we took our profit here, another high was created here, making this to be our new low. Making this to be our what? New low. Here now is the new low. If you observe, you will see that there was a break of structure. There was a break of structure. At that area. Now, all you need to do is take your Fibonacci all the way from this low, all the way down to this high, all the way to this high. Now, placing it here, you will see that the Fibonacci also played out correctly here. We had a retracement all the way down to the 0.61 area where you should enter for a buy, and the market continued to go up. But we found that we had a little retracement here again before it went up again. But if you observe, you notice that it touched our current high at this area before the market came down. So you should be looking at taking your profits. Your buy entry should be around this area. Your stop loss, remember your stop loss should be below the 0.7, and then your take profit should be above your current high. And if you observe, you see that this market played out correctly here. This market played out correctly here. Now, today is the 27th of March 2025. I traded gold today. Now, I use the Fibonacci to trade gold today. Now, if we should go to today's trade with gold, you will observe that it played out correctly here with gold. Before I made use of my Fibonacci here, if you observe, there was a break of structure. There was a break of structure here. There was a break of structure here. There was a break of structure here. and if you and this was the current higher low, and this was the current higher high. So this was how I traded code today, being the 27th of March. So I used my Fibonacci retracement all the way from the higher low to the higher high. Now if you observe, that market retraced all the way from the higher high. Sorry. You observe that market retraced all the way from the higher high down to the 0.61 area. It didn't cross our 0.7, but it almost did. But it didn't. It almost touched down to our 0.7 area, but it didn't. It touched down to our let me make this a little bit wide. Okay. Drag your Fibonacci all the way from here to your swing high. Yes, you observe you observe that the market came all the way down to our 0.618 area before hitting the high again. So this was a trade that made me close to $400 today, because I entered for a buy position. Around this area. And I put my stop loss below the 0.78 area, and then my profits to the current high, and this was how it played out. So guys, this is a simple illustration on how to trade with the Fibonacci retracement. I hope this helped you out in one way. You need to backtest your strategy, backtest your charts. Go and check it out. Go back to your charts. Practice the same makes perfect. So keep practicing with the Fibonacci until you get good with it. So I hope this helps you out. Thank you and God bless.